Welcome back to Investing Talk Podcast.
Today we're looking at Terawulf, or WLF. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
Okay, so WULF, we've definitely been watching this one. I mean, the company's going through this pretty massive transformation.
Right.
And the financial moves they just made, I mean, that's really why we're digging in right now, isn't it? Specifically, this huge capital injection in October 2025.
That really is the heart of it. It feels like WLF basically traded, some of that speculative crypto risk for more certainty around financing their infrastructure. They raised a lot of capital, huge amounts, gives them a runway that, honestly, a lot of their competitors just don't have right now.
So let's unpack that capital. What exactly did they pull off?
Well, there were two main deals. First, they did a $3.2 billion senior secured notes offering. That was through a subsidiary, WULF Compute.
Right, senior secured notes, basically a loan backed by specific company assets. Makes it safer for the lender.
Exactly. And for WLF, the result is, boom, much lower near-term liquidity risk, which, in anything touching crypto, that's a huge signal of stability.
Yeah, stability is definitely the name of the game there.
For sure. And then on top of that, they did another $1.0 billion in convertible notes.
Convertible, okay.
Yeah. After fees and everything, they walked away with about $975 million. And they were really clear, this cash is for growing their data centers and, general corporate stuff. It's expansion fuel, not just patching holes.
Okay, but what really caught my eye was the management sentiment here. There was something specific tied to that debt, right? Sounded incredibly bullish.
Oh, absolutely. You have to look at these capped call transactions they did alongside the convertible notes.
Capped calls, right? Explain those quickly.
So essentially, it's a way to hedge against dilution if the stock price goes way up. But the price they set the cap at, $18.76 per share.
Which was what, more than double where the stock was trading?
Exactly, more than double. It's basically management making a massive bet implicitly that they see the stock potentially doubling or more long-term.
Right.
Setting the cap that high screams confidence in their future value. It's a huge psychological signal, especially after September when the stock had already jumped, nearly 21%, mostly on the back of Bitcoin's rally.
So, okay, they've got this huge war chest now. But where's the actual business growth coming from? Let's talk fundamentals. Feels like they're trying hard to be more than just a Bitcoin miner.
That's the key narrative shift, absolutely. WULF is moving beyond just mining Bitcoin. They're seriously pushing into high-performance computing, HPC hosting services, and building out infrastructure specifically for AI.
Right. HPC, for anyone listening, that's basically the heavy-duty computing power needed for serious AI development, machine learning, that kind of stuff.
Precisely. And by pivoting there, they're positioning themselves right in the middle of this, frankly, desperate demand for more AI compute power. It's a massive market tailwind.
And are we seeing that translate into actual numbers yet? Operational growth?
Yeah. We are. Q2 of 2025, they saw revenue jump 34%, hit $47.6 million. That was outpacing a lot of their direct competitors.
Okay, 34% is strong.
Yeah, and the consensus forecast for the full year 2025 revenue is sitting around $204.1 million. That kind of growth ramp up is exactly what gets the market interested, willing to pay a bit of a premium.
But growth is one thing, profitability is another. Can they actually make money doing this? We need to look at operational efficiency.
That's the million-dollar question, isn't it? Or maybe the billion-dollar question here. Their Q2 2025 EBITDA.
Earnings before interest, taxes, depreciation, amortization. Basically operating profit.
Right. That came in at $14.5 million. So operationally, before you factor in the huge costs of capital and depreciation, they are profitable. The challenge now is translating that into positive net income, actual bottom line profit.
And they also had that ESG angle, the zero carbon thing, that must help attract bigger investors.
Hugely important. Being a zero-carbon digital infrastructure provider is a major competitive edge. It opens doors to institutional money, funds that have strict climate mandates, ESG requirements, and they're leveraging that. The sources mentioned deals like the one with FluidStack and these planned collaborations with Google and Morgan Stanley, specifically aimed at financing and speeding up this AI infrastructure build-out. It ties their success directly to the AI boom.
Okay, let's pivot slightly. Technicals. The stock's around, $13.71 as we record this?
Yeah.
From a charting perspective, Is the momentum real or is it getting frothy?
The signals look pretty robustly bullish, actually. It suggests sustained confidence, not just, short-term hype.
How so?
Well, the stock is trading comfortably above its key moving averages. The 50-day SMA is down $11.20, and the 200-day SMA is way lower, like $5.91.
Okay, that big gap usually signals a strong, established uptrend, right?
Exactly. Confirms the longer-term upward momentum.
So what does that technical picture suggest for the near term, say, the next few months?
The analysis points towards a continued bullish trading range. They're projecting something between, say, $13.19 and $14.30 over the next 3 months or so. And, importantly, the momentum isn't overheated. The RSI, the Relative Strength Index, it's sitting neutral, around 46.35.
Why is neutral good here? Sounds kind of meh.
Well, neutral means it's not overbought. It suggests the buying frenzy hasn't exhausted itself yet. There's potentially still room for it to run higher without hitting those triggers that often lead to a sharp pullback. The buying interest looks sustained, healthy.
Okay, that makes sense. And does that line up with what the Wall Street analysts are saying? What's the professional consensus?
Yeah, it aligns pretty well. The consensus rating is actually a strong buy.
Strong buy, okay.
Price targets. The range is pretty wide, gotta say, from like $4 on the low end up to $21.50. But the average target comes in right around $13.40. So generally optimistic.
So if you're thinking about WULF, is this more of a short-term trade playing these catalysts, or is it a longer-term infrastructure investment?
The analysis suggests it could be both, really. Short term, you've got the technical strength, upcoming events you could trade around.
Right.
But long term, the core idea is tapping into that structural growth in digital infrastructure, powered by the AI pivot, and, crucially, funded by that massive capital raise we talked about.
Okay, we've definitely painted a pretty bullish picture so far. The cash, the growth narrative, the AI angle.
Yeah.
But we have to balance this. Time for some caution. What are the big risks? What should make someone hesitate on WLF?
Yeah, absolutely needs the skeptical view. First, and this is critical, they're still showing a net income loss. Despite that strong revenue growth, once all the costs are factored in, they're not profitable on the bottom line yet.
Growth at a loss always needs scrutiny.
Always, especially when valuations might be high. And second, let's not forget, they are still very much tied to the price of Bitcoin. That volatility is a huge external risk they just can't control.
Let's talk about that valuation. We heard the term stretched. How stretched are we talking? Is the market already pricing in years of perfect execution?
It kind of feels that way, yeah. Stretched basically means the current stock price likely already reflects a big chunk of the expected future growth from this AI pivot.
So, paying today for success tomorrow.
Pretty much. It leaves very little room for error. If Q3 earnings disappoint, or if this infrastructure build-out hits delays, takes longer than expected, the stock could get re-rated downwards pretty quickly.
And compounding that is the visibility, or maybe lack thereof, on the balance sheet right now, especially after bringing in billions.
Exactly. Huge point. They just raised billions, right? But the official SEC filings, at least at the time of this analysis, didn't give us the immediate, super detailed picture of their debt levels or cash reserves after those deals closed.
That seems important.
It's crucial, especially since they're also talking about potentially another $3 billion in debt financing with big partners. Not having crystal clear transparency on the current balance sheet right after a massive raise, that's a concern. Needs clarification fast.
So the outlook is bullish because of the strategy shift. But the high price, plus that immediate lack of financial clarity post-raise means you got to be careful.
Absolutely. Performance has to follow the promise. We need to see clear proof, especially in the next earnings report, that this capital is actually translating into better operational leverage.
Meaning revenue growing faster than costs.
Right. And a clear, believable path to sustained net profitability, particularly from those potentially higher margin HPC and AI deals.
Okay, speaking of that next report, let's look ahead. What are the key dates, the specific catalysts coming up in the next 3 months that listeners should really have circled on their calendar?
Okay, first one, November 13th, 2025. That's the Q3 2025 earnings release.
And what should people look for there, beyond just the headline revenue number?
You need to look for details on how they're deploying that new capital, proof of the data center investments actually happening, and evidence of that operational leverage we just talked about, signs they're scaling efficiently.
Got it. Then, shortly after that, there's a big market event.
Yeah, November 25th, 2025. That's a major ETF rebalancing event. If WULF's market cap and trading volume have grown enough to get it included in new indexes.
Then all funds tracking those indexes have to buy the stock. Forced buying.
Exactly. That passive demand could give the share price a sudden, significant kick.
Okay. And then into December, what's happening then?
December 10th, 2025. That's the deadline for institutional 13F filings.
Ah, see what the big money did.
Precisely. These filings show the stock holdings of large investment managers. It's our first real look at whether major funds bought in significantly after that big capital raise. If you see sustained buying or big new positions, it signals strong institutional belief in the long-term story.
Makes sense. Beyond those hard dates, any whispers, any rumors floating around that could move the stock? Speculative stuff.
Well, there's always chatter around potential index inclusion, maybe even getting into the S&P Small Cap 600 sooner rather than later if their numbers keep improving. That'd be a big validation.
Okay. And on this business side, partnerships.
Yeah, persistent rumors about more strategic partnerships, tie-ups with major cloud providers or AI companies who want access to their zero-carbon data centers. Given WLF's positioning, a big deal there could fundamentally change the stock's valuation overnight.
Right.
And naturally, being in the crypto space, there's always the background noise about maybe a big Bitcoin treasury announcement deciding to hold more Bitcoin directly on their balance sheet.
Okay, let's try and wrap this all up. Summarize the overall investment thesis here, considering everything. The money, the AI pivot, but also the risks like valuation and profitability.
I think the analysis lands on, let's say, an overall bullish rating, maybe an 8 out of 10.
Okay, 8-10 bullish, why?
The reasoning really leans on that strong operational growth trajectory, the smart strategic shift into HPC and AI infrastructure, and just the generally positive analyst view, which seems backed up by management's own confidence signals with those capped calls.
But balanced by...
Balanced by the fact that, yes, the valuation does look stretched right now, and that path to consistent bottom-line net income profitability, it's still a bit uncertain, needs proof.
So it feels like the company has made the right moves to set themselves up for the future, capture this AI wave, but now the pressure is really on to execute perfectly.
That's it exactly. And really, if you boil it down, the core question for you as an investor is this. Can the growth they get from this big shift into high-performance computing genuinely outrun the inherent risks tied to Bitcoin's price swings? And maybe even more immediately, can the upcoming Q3 earnings finally show a clear, convincing path to sustained profitability? That's the next big test for WLF.